Let's welcome on board Sudip Bandyopadhyay as well and find out what are his thoughts on the market right now. Sudeep, some of the markers at least seem to be reversing. Afternoon, firstly, crude is on our side, and now RBI also is pumping in a whole lot of liquidity in the system. Do you think that's enough to turn around the markets?
Well, it may not be enough in the long term, but I think short-term market is very much excited. Also, you must remember that a lot of good things are happening in Europe. Their debt ceiling, which they had imposed on themselves, they are agreeing to breach that. So is specifically Germany. And I think incremental liquidity, incremental economic activity in Europe is good for countries like India. Dollar index is also coming down. You mentioned crude is already down. I think these are good indicators as far as India is concerned. But we have to be careful. FII selling hasn't yet probably abated. And we'll have to keep a strong watch on that. Look, FIIs have been holding mostly IT and BFSI stocks. These were the two favorite sectors. And the recovery isn't that sharp in IT and BFSI yet. So obviously the selling by FIIs is probably still on in those two pockets. A lot of other segments have picked up quite a bit, but not IT and BFSI.
So the other sectors might have peaked, but not IT and BFSI is the take coming in from Sudip. But we have been speaking to Global Voices, and today we spoke with Vivek Paula, who is the head of portfolio research at BlackRock Investment Institute, and he believes that the structure of the opportunities is sizable in India. He also says that for someone with 5 to 10 year horizon, now is the time to build your portfolio in India. Let's go across and listen into him.
Structural opportunities are sizable in India. So if we were thinking for anybody with an investing horizon 5-10 years out, we would be building portfolios today using our core IP where you'd hold a greater allocation than a benchmark weight. And that's true for the bond market, that's true for the equity market as well. And that's a function of structural dynamics being positive for India. But on the structural side, the demographic sort of forces underpinning India are really strong. Most of the developed markets, China, are going to experience a shortfall in working age population over the coming 20 years. India's going to experience a big gain in working age population in the coming years. And you think about the geopolitical dynamics that we're in now, a multi-aligned country such as India is likely to benefit from that sort of environment more in the future. Right, if you were to look at current price earnings multiples and compare them to the past, it's not obvious that it's cheap by any measure, right? And people have been talking about that being expensive. But actually, if you think about things in a slightly different way, if you think about the risk premium associated with Indian stocks, I would argue that's not particularly expensive in a historical context. And the reason why I get a different answer for that story than the other one in terms of price earnings metrics is taking into account future earnings growth, taking into account the future path of rates being different from the past. I actually would argue that on a long run basis, particularly in large caps now, it is not the case that Indian equity are particularly expensive. And that's part of the story for us as to why we think on a structural horizon there's an opportunity. The valuation story that I would argue is actually still, I don't think it's as expensive in Indian equity, for India, over when I take a broader kind of lens and look at the risk premium dynamics.
Okay, that's the view coming in from the house of Goldman Sachs. BlackRock Investment, I beg your pardon. Vivek Paul speaking with us exclusively earlier this morning. But Sudip, the consensus call on the street, and especially more so after the RBI's measures to inject liquidity in the system, seems to be buy banks, buy financials, and stick with the larger cap ones, to be on the safe side. Is that your thought as well?
Well, absolutely. I've been recommending that for quite some time, and I'll continue to mention that. I think, beyond the RBI liquidity injection and other positive developments, the banks were really attractively valued. Post this correction, some of the larger banks, particularly SBI, was looking very good, and somebody willing to build a long-term portfolio, SBI was definitely a good buy and continues to remain such. Apart from that, I think, some of the down and out banks, which took a hit because of multiple reasons, particularly asset quality issues on the microfinance book. I think the time is coming for having a look at them. IndusInd Bank is, for that matter, one bank which I will definitely recommend from a little aggressive investors' point of view. I think we have seen the worst, and things should improve from here on. So it's a good time to start buying into IndusInd Bank as well.
All right, good time to buy IndusInd Bank. That's the word coming in from Sudip. But today, a lot of these sectors are doing pretty well, especially the PSU pack, because we have been talking about the move in the OMCs. But other than that, stocks like Coal India as well as NTPC, they are doing pretty well for themselves. Coal India was the stock that Naresh flagged off a while back. But help us with your take on some of these power-related counters, Naresh. Stocks like NTPC, Power Grid, they are holding on to the gains of 3 to 5%. Any stock that is standing out amongst the two?
So both NTPC and Power Grid. So we looked at NTPC when it was making a double bottom around that 300 mark. Now what has happened in the last few sessions is it crossed the interim highs around that 330, 35 mark. So that's a confirmation of a short-term bottoming in place, and we could go all the way to 370. Then we look at Power Grid, very similarly placed a large correction done from 365 all the down to 250. The interim highs for the last few weeks have been crossed. Here also we can slowly and steadily make a bounce back towards 290. So both the stocks become a buy on dips from here on.
Just a few minutes left before we shut shop. While we look at the benchmark indices, it's Nifty Bank that has cooled off a bit from its highest point, while Nifty actually sustaining comfortably above that 22,550 odd mark. It's looking like we are in for a decent closing, but let's also watch out for Dow Jones futures as well, because over there we are seeing a 300 points of decline onto Dow Jones futures. So let's see how the US markets pan out today, because we will be of course watching out for the jobless claim data. But Sudip, back home what we are seeing is that the pharma stocks, they are day by day inching up higher. Some bit of a strength is returning in this particular pack. So given the flip-flop in the US term tariffs, what we have seen coming into autos, do you believe that the correction and the concern in the pharma space in the Indian players is overdone now, and it's the time to once again look back seriously into this sector?
I think, I still believe that it's better to be a little cautious. I think, the US is going through a phase where, volatility is the name of the game. Every morning there are new things coming out, and, by end of the day, there are further new things getting added. So amidst this volatility, it is little difficult to, take a call, at least for the short to medium term on these pharma stocks, which most of them have significant exposure to US. Yes, the cost of manufacturing, which is the alternate being proposed in US, is probably 5-6 times compared to, the same in India. But, these are not fully rational at this stage. There are a lot of irrationality, in this decision making at this stage. So if I do like pharma, and I believe that pharma is at a space where IT was 15-20 years back. And the quantum leap in pharma is bound to happen. When it will happen, I don't know. But at this stage, if somebody has to play pharma, I would definitely say look at domestic focused pharma companies. I do like Mankind Pharma quite a bit, and that can be looked at definitely. Their BSV acquisition was criticized, but I think it's a fantastic long-term strategy. I also like pharma companies like Piramal Pharma, which have got significant manufacturing facilities in the US. So if you have to be a little safe, still play pharma, go for domestic focused pharma companies and pharma companies having significant manufacturing facilities in the US.
Quite interesting. That's the take coming in on pharma right now. In fact, let's address some of those pharma movers. Piramal Pharma, of course, is one stock that, Sudip just talked about. Let's bring out its 52-week chart and see how much it's actually fallen in this correction, because it sure has had its, share of damage. But if you were to take stock of the last 52 weeks, you're still actually sitting on near about a 60% gain. 57% of a gain is what Piramal Pharma is actually still sitting on, hovering around the 200 odd mark. Naresh, tell me, how do the charts read for Piramal Pharma?
Going through a huge phase of consolidation for the last few years, the stock started making a trending move. The move was above that 160, 180 mark, which was the listing day high. And now we are back to closer to those 180 marks. So that's a good entry point for the medium term. Volumes have been good in the previous rally. Even now on the dips, there have been decent volumes. So at current levels, looks like an interesting place to accumulate. This could be one which could again lead back, go towards 250 odd levels in the medium to long term.
All right, that's the take coming in on Piramal Pharma. Let's watch out for that. Other than that, Cipla, Lupin, they're also holding up well. What we are seeing is some of these IT counters like TechM as well as Infosys, they are not doing that well in today's trading session, and especially TechM. The stock didn't fall in the initial trade, but ending the day with a cut of over 2% right now. But with this, before we shut shop, let's also take some of the BTST ideas from both of our experts, Then and Kunal. Any stock that is standing out for you at this point in time?
Yeah, I'll go with two buy calls, and the first one is about Axis Bank, a stock which apparently has been more sideways, but I think at 1,030 levels for Axis Bank, it looks like the stock is on the verge of a pennant kind of a breakout on the daily chart. So we'll look out for targets in the range of 1,075 and stop loss at 1,014. Raymond is the other stock which I think is also nearing a major bottom for itself. Around the 1,300 levels. Looks like that over the last 2 days, the stock and the volume patterns have started to improve for the stock. So expecting this the stock to get a follow through up move. 1,500 as a near term target. Stop loss to be kept at 1,270.
All right, so those are the stock calls coming in from Kunal. But Naresh, what about you?
So first would be a buy on Coal India. The stock has made a double bottom around this 350 mark and has started reversing sharply. Stop loss at 378, target price of 392. Second is a buy on Aarti Industries, which has gone through a very sharp correction. And oversold bounce and play out here. Stop loss at 407, target price of 425.
All right, those are the calls coming in from both of our experts then. But yes, of course, Nifty 50 is giving us and indicating us a strong closing for ourselves. We have once again managed to scale back that 22,500 mark as well, while Nifty Bank 121 points of gain. But Kunal, a while back, I remember when the markets were on the one-way down move, you were actually discussing about that Friday impact, that Fridays are generally not that great for the markets of late. So tomorrow is Friday. How do you see the closing?
This Friday should be different. And yeah, so I think we've come out of a major correction, and I think now the sentiments have started to improve. I think what matters over here is that how the index holds up after this third consecutive day of gain for itself. So this is the third consecutive day we've moved up 500, 600 points. If you look at 21,900 thereabouts is a low for the Nifty. There could be a pause for the index for the next couple of days, but I think what this move has done is because many of these stocks have managed to make a comeback. Some of the stocks are at multi-year highs. Some of them have come back about their long-term moving averages, like the metal stocks, etc., which are trading about their 200 DMAs. And then some of them have recuperated losses of almost 1 to 1.5 odd month, over the span of the last 3 days of a bounce. Now, when you see such kind of a scenario where stocks, they generally tend to move up in their own trajectory, depending on the beta of these individual stocks, we expect that the move for the index would strengthen going forward. So I'm not too much concerned about the potential Friday move for the indices, but I think potentially over the next 1 week to next 2 weeks, you could probably expect the index to see a follow through up move. 22,800 is where I would believe that the index should head towards.
All right, so let's watch out for those levels. But Sudip, today, of course, the heavy lifting was done by Reliance Industries, because we were just discussing that how brokerages are now coming up with a re-rating and spotting Reliance as a re-rating candidate. And we all know that there wouldn't have been any fund manager who would not like Reliance and who would not have Reliance in their portfolio. Give us a sense that, do you believe that Reliance can actually outperform the benchmark indices in the next 1 year? Because in the past 1 year, it surely has underperformed significantly.
Definitely. I think there are multiple triggers, and I think the research reports you are referring to are talking about some of them. I think the biggest trigger is going to be the Geo Platforms listing. The IPO is expected to happen sometime during the current next fiscal, and that will be a significant value unlocking event. Also, the tariff hike as far as Geo Platform is concerned is expected. It may happen, in this calendar year, or it may get pushed back to the February, March of next calendar year. But it's going to happen, and that will again have a positive impact. As far as retail is concerned, I think we have seen the worst. The footfalls are increasing. The coverage is increasing. And going forward, I think even retail will start to do well. O2C has been a bit of a soft spot for quite some time, but I think there are expectations of O2C also performing and outperforming. So overall, I think value unlocking will be the #1 trigger. And beyond that, sheer performance improvement also will definitely help the counter and help the script.
Coming in on Reliance. Naresh, what's your reading on the charts? I mean, how much more can actually Reliance move up? Because it's been thrashed, what, almost 20.5% in this recent fall in the market? Naresh, you'll have to unmute yourself.
Yeah. So if you look at Reliance Industries, the previous bottom was 1220, which it was holding for the last 3-4 months. A break below that did not see large selling pressure, and now sustaining about 1220, 1230 levels would be an indication of a false breakdown, and we again go towards 1330. So the first expectation is that eventually it goes back to 1330 odd levels.
The take coming in on Reliance Industries, 1200 thereabouts is where it's currently at. By the way, the index has completely given up all of its gains. Just look how we're actually cooling off right now. No, sorry, I stand corrected. That was another chart. Got to refresh my screen there. Still holding up 190 points up in the green. There's, of course, Asian Paints, there's Coal India, there's Hindalco. Reliance is now moved up about almost 3%. And then, of course, there's a Tata Steel, Bajaj Finance. These are all names which are still looking good. What's not? HDFC Bank. That's lying lackluster in trade. Trent as well, lower by about 1%. There's Kotak Bank and BEL2, which is languishing at about 0.7% or so. So, what happens to the entire PSE story, and in particular about defense? I know it's a fraction of when you bought that stock, but after the recent fall, do you think they will show the same kind of leadership as they did perhaps 7 to 8 months back?
Well, I don't think they will show the kind of leadership which we did see them demonstrating about 7-8 months back. I think that was a bit over the top, and a bit irrational. The valuation was definitely out of sync with the fundamentals. Things have cooled down quite a bit, but even then, I think they're not cheap even today. But I do like BEL, Bharat Electronics, quite a bit, and I've been recommending a buy there. Look, it's in defense electronics, and it caters to Air Force, Army, Navy, all the three segments. They have gone into exports as well. It's a very well-managed company, strong balance sheet, and they are now moving out of defense electronics and into major other areas like metros, the metro travel. So I think the opportunity for this company to continue to perform and outperform is significant. This correction should be taken as an opportunity to accumulate this stock.
This correction should be taken as an opportunity to accumulate BEL at this point in time. And yes, of course, we have been discussing about BEL for the past couple of days, and especially on the back of the ramp up in the European defense business. And the stock has also seen a good jump this particular week. But with this, would like to thank you, Sudip, Naresh, as well as Kunal, for taking the time out and speaking with us this afternoon.